Hey everybody, welcome back. I know that I said I would get back to you on the second video for this CGC Acreage Holdings merger, if you want to call it that. But it's been more interesting than I thought it was going to be. So it's been a week, but let's get into it. If you take a look on my screen there, you can see I've done some napkin math on how the share structure of the two companies merging after federal legalization for the states plays out. Now, these numbers are only plausible or realistic if federal legalization occurs. If it doesn't, this doesn't matter. But the $2.50 cash payout there you see on the screen, that will happen regardless for Acreage. They will get that 300 million. I do not know if that's in Canadian or American. I'll have to check up on that, but that is the one certainty that you can account for in this whole thing. So anyways, I just wrote this down just so I don't stutter through it like an idiot, which I probably still will, but bear with me, still a little new to this. Anyways, getting into it. Buying one Acreage Holdings share today, you're essentially getting 0.58 of a share of CGC when federally legal, of course, and options can be exercised. So this is like a long-term scenario, I hope for most of you anyway. Plus a cash payout of $2.55 to be approved sometimes this summer. Now that statement about it being approved in the summer has to do with the fact that on, I believe it's June 8th, the States Act will come into play where, or at least be up on the docket, where you can jump between states. I'm a Canadian, so like my political understanding is a little gray, but they'll be able to operate state by state where it's legal. And fingers crossed, the hope is that if this happens, that Canada will be able to operate in America on the basis that as long as they stay in a state where it is legal, they can operate in the States. If they were to say operate in, I can't think of a state that hasn't legalized yet, Nebraska, then they're breaking the guidelines if this bill is passed, and then they would be essentially booted off the TSX up here in Canada and the New York Stock Exchange down where you guys are. Well, most of you anyway. But back to this, I kind of lost track here. Back to the napkin math. So buying one share of CGC today via Acreage, you would need to buy one or 0.58, which equals 1.724 rounded up. No, we would round that down to 1.71 shares of Acreage Holdings, which would cost you $21.32, which equals 36.75 of Canopy. So I know that's kind of like I might have lost a few people there, but basically by purchasing a share of Acreage and holding onto that share of Acreage at 21, once the deal is finalized and the merger and acquisition is complete, you will receive at today's market prices. So assuming that the market price for CGC stays at, what it is right now, then you would receive a 28% discount of CGC shares, which would be $34.20 per share, while the market's currently trading at 47.41 or 40. It might be at 48 now, depending on what time this video goes live. But this will happen. It's just a given. But you have to understand that even though it will happen, it's going to take time, and you have to have at least a little bit of assumption that it may not, if that makes any sense. I really feel like starting this video over, but I think I'm just going to post it because you know what? It's going to be rough either way. The next one, you just got to keep doing this till I'm like a fine, well-oiled machine. But anyways, I don't know. Take a look at my math. Tell me what you think. Please post in the comments. Rip me a new one if you have to, because I'm a sucker for constructive criticism. Anyways, it's been fun, and enjoy my shitty video. Thanks, guys. Peace.